Well, what a day in the stock market that was. A volatile day, a crazy day. I would say it's probably the craziest volatile day I've ever seen in the stock market since I've been invested. If it wasn't that, it was certainly the last time we saw volatility and the market moving as much as that was in 2020, when the CV situation was happening and the market was thinking, oh, is this getting really bad? And then there'll be the next set of cases that were coming out, and you're seeing like, oh, actually, maybe it's not that bad, this CV situation. And then the next report came out, and it was like, oh, this is really bad, and the stock market kept dropping. There was crazy volatility, and there was about a million different news stories that happened as well during the day. So I'll try cover them all for you today. But wow, I just kind of sat down on the sofa and I was just watching CNBC news all day. Not that I normally take anything too serious from it. It's quite a bit of a day trader channel. And, you know, for me as a long-term investor, I just get to sit back and watch the chaos unfold as people are shouting at each other. But yeah, it was actually quite funny to be watching CNBC News all day. So, first of all, the S&P 500, the volatility was absolutely crazy. You can see here at one point, we went from about a 6.5% swing on the S&P 500. You don't normally see that during a normal trading day. And just look at these movements here. I mean, we dropped 4% and then we went up another 3%. Then we dropped again another nearly 3%. And then we started. Even right now, the stock market isn't closed. So by the time I record this video and edit to you guys, the volatility in this market might move the stock market even more. And what also might happen is where I might have another million news stories that come out. This is such a fast-moving event where so many news stories come out. It's really hard to keep up with it, and things just come so outdated very quickly. What was interesting though is last night. I don't know if you guys were looking at the stock market before it opened. I was watching it as the futures kind of opened, and I was watching it through like 3 a.m., 4 a.m. The benefits of having a three-week-year-old baby that wakes up every 2 hours and doesn't sleep. I guess that's kind of some of the benefits to it. I was like looking at the stock market every time I was waking up nearly every 2 hours and seeing what was going on. And yeah, I was looking at like the stocks and so much bloodbath out there. The S&P at one point on the futures was down like another 5.5%. And there was talk, media posts that were coming out through the night talking about, is this going to be Black Monday all over again? And obviously by the time we opened up, we opened up a little bit negative, but we have certainly rallied up. And actually today, so far, we'll see what happens. My actual portfolio is actually green today, which is actually quite surprising. We'll see what happens. There's plenty of time still to go. But yeah, during the night, the futures were awful, like down another 5%. There's concerns that we might see might have the circuit breakers starting to be hit tomorrow. I mean, Hims and Hers, look at the volatility in this one. This one at one point had nearly an 18% swing in Hims and Hers. Now, we've got used to some volatility in Hims and Hers, but obviously even that's quite impressive for Hims and Hers. And during that, there's loads of bouncing around. Just to show you, this is one of my buys yesterday. So I did a couple of buys early in the morning, and this is what I bought Hims and Hers at. So this morning, I actually bought Hims and Hers at $23. Obviously, if you look right now, we're near $27 on Hims and Hers, which shows you how much stocks went down during the night. So many stocks went down. Overall, though, obviously, you guys on the Patreon, you obviously see my live buy and sell alerts, and you saw the buys that I did. I actually went quite heavy this morning into stocks. I bought 12 stocks this morning, which I think I've got a screenshot for you guys, which, yeah, you can see here the screenshot from the Discord. My long list and there was another list after this. I bought about 12 stocks, and by the way, a lot of you guys have been enjoying the Patreon, so thank you for supporting the channel. And I think obviously a lot of you guys right now in this volatility trying to get that support group and like look for those opportunities. What are you buying? Take interest in other people. What opportunity? Make sure you're buying the best opportunities out there. And I think that's why a lot of you have been joining at the moment. So thank you. There's been like 5 to 10 people every day joining. I said it yesterday on yesterday's video. If you are going to join the Patreon, guys, just make sure you don't do it through your iPhone and through the app on the iPhone, because they charge an extra 30%. So if you do it through like the web browser, you will get it 30% cheaper. And it should be £6 a month. And if you end up paying £9, which some of you guys have been paying £9, save yourself £3 a month, guys. Like across the year, save yourself some money. Make sure you do it through the web browser as well, guys. But yeah, thank you for everyone that's been signing up at the moment. But yeah, crazy volatility there. DraftKings, look at this. DraftKings was at $30. I'll give you a clue. This was another one I bought today, to be fair. A 15% swing at one point on DraftKings. We actually saw DraftKings go below my average today. When the stock opened up, I was actually negative on DraftKings, which was absolutely crazy because like 4 weeks ago, maybe not even 4 weeks ago, maybe like 5 or 6 weeks ago, I was actually selling some of my DraftKings position for an 80% gain. And now it's actually below my average. That's absolutely crazy. SoFi, SoFi was dipping into the $8 range. I mean, we hadn't seen we hadn't seen SoFi in the $8 range. Like, it's going back. It was going back down to these levels it was at in like June time 2023, and that time period, like we saw SoFi bring out fantastic earnings, and it never got that reflection on the share price. And then we suddenly started to have that reflection on share price, and then now it's giving it all back again. It's crazy. And I look at DraftKings. DraftKings is probably not going to be a stock that's going to be affected by the tariff situation that much because it's all in the US, it's sport betting, and if anything, in troubled times, people actually do more sports betting. SoFi, same again, it's all US. I guess you could say maybe there's the concerns about recession and maybe that slows things down slightly, but nothing too major. Shopify, maybe one that does get disrupted a little bit more, but once again, we saw another 16% swing in Shopify stock today as well, which is absolutely crazy. But overall, I've got to say, in my opinion right now, stocks are actually starting to look a little bit more attractive. I've been on this YouTube channel for a while and I've been saying I don't like the valuation of the S&P 500 at the moment. Not that I'm a buyer of the S&P 500, so I don't have to worry about it that much, but overall kind of gives you a valuation of where the market's at. Obviously I'm interested in individual stocks, but I've been saying for a while, like, the S&P valuation makes me a little bit nervous. And we were at quite high levels of like nearly 29 times earnings at one point. Now, if you look on a forward P ratio basis, we are starting to really start to dip down. Depends where you kind of point out where to look at, but if you look at Q4 2025, that's around about 22 times earnings. I guess maybe we should be looking at Q1 2026 now. 21 times forward earnings for the S&P 500. Normally it trades around about 20 times earnings. That's actually not too bad. If you look at the Q4 of 2026, the next 12 months, that's 19 times earnings. That's not too bad at all. Now, the other thing is, like, that's not a bad valuation if there's no issues in the world. The thing is if you do start pricing in a bit of a recession, which could be a very short-lived recession. It depends on, the man that has all the power is on obviously Trump, and it depends how far he wants to push this. And without a recession, I'd say that's not actually bad valuations, but obviously you'd value it totally different if it was a recession. But I don't think we're at the point of valuing it at a recession level just yet. We'll see what happens. It depends how long these tariff situation goes on for, and nobody knows how that's going to happen. So I won't try and guess what's going to happen there. What was interesting during the day is that we actually hit the obviously it's probably all the concern over the weekend. The market sold off, and then this big shoot up here was actually caused by a fake news story. So the fake news story came out that there was going to be a report that there was going to be a 90-day tariff pause to do negotiations, except for China. Obviously China, no, you don't get the pause. But for everyone else, it turned out to be a fake news story because I think whoever it was that was quoted, they took it out of context, and it was like, I can't remember the exact quote, what it is right now, but then some of the media ran with it, and it was like, no, that's not actually happened, as it got confirmed. But it just shows you that if we were to have a situation where something like that was to happen, or we start seeing some of these deals coming out when the negotiations are successful for these tariff situations, it does show you how quickly the market can rebound. It can rebound very, very quickly. And this is why I don't time the market, because you don't know when this is going to happen. And as soon as this can happen, very quickly you can be there and you can miss probably like the best day, the best jump up in a lot of these kind of share prices, and you don't want to miss it. I think there's a statistic out there that's something like, if you miss the first 10 days of the rally out of the bottom of the market, you can lose like 50% of your returns, or it might be even more than that. So, that's obviously why you don't want to time the market there. What obviously was interesting then after that is then we had Trump actually then said to China, if you don't remove the new tariffs that you've put on us, we're going to put more tariffs on you. And then the stock market then dipped again on that, but it seemed to have held it up a little bit. And I think that maybe the reality check there is that there was just that negativity coming in from the weekend, and then people realised, okay, there's maybe not that negativity there at the moment, so we'll buy up. And obviously maybe that reality check of, okay, if there was ever some positive news, that's how quickly we could rally out, so we'll buy there. Maybe some shorts closed. But what also was interesting is that if the market held down here, we were actually going to have an official crash. We were going to say, we went through the 2025 stock market crash. Now, at the moment, we won't be there because the market has to close in a crash to be officially registered. So right now, we're down 18.5%. So we need another 1.5% to say we actually entered a crash in 2025 because it doesn't count until we actually close. Same thing happened in 2018. So any of you guys that were invested in 2018, you would remember this. Any of you guys that was watching the YouTube channel in 2018, shout out to you guys. Let me know in the comment section. But in 2018, we had something similar where the stock market, actually, I don't know if I can pinpoint it. I'm not going to be able to get it exactly. But in 2018, the stock market closed at like 19.3%. So it was never officially a crash. We went into a crash, and as the day went on, it kind of bounced out of the crash. So it never closed as a crash. So 2018 will never show up on like the history of crashes in the stock market because it didn't close there. And now at the moment, it stands to be the same thing. Now, obviously, this could change very quickly because if more negative tariffs come out, then we might get pushed back into a crash situation. But that's the last time we had it. And the funny thing is, when you look at 2018, it was exactly the same. Trump came in on his first year, did all these kind of first year. I guess it was actually second year, but came in and did all these tariffs on China, and that caused the stock market to fall massively. Obviously, though, the stock market rebounded, and if we actually look at the S&P 500, if you look at 2018 as a whole, it was actually only down 4%. And the reason why is because at the start of the year, we actually rallied up a lot. And then we had the dip. So it didn't look as bad on a closing point of 2018. But then what did happen is that there was all these concerns around these tariff situations in 2018. And we'll see if it could easily get worse in 2018. But I think a few people are thinking like, oh, it's the end of the world. But we've actually been through this situation already. You only have to go back to 2018, and you guys went through 2018. And very quickly, a lot of this negativity and how quickly we can rebound. 2019, it ended up being a fantastic year. The stock was up, 31%. And that was the best performing stock market we've had since 2013, actually. So 2018, 2019, fantastic year for the stocks that rebound out of this tariff situation. And that's obviously why you want to be careful, and that's why you want to plan for the long term. And the overall thing is that when I look at this whole tariff situation at the moment is that obviously, Trump has all the cards at the moment, and it depends how far he wants to go with it. And the thing is as well is that, he is going to be able to bully a few of these countries at the moment because, America is the strongest economy. All these countries do need to trade with America, and they won't want disruption. How far they want to battle with it, we'll see what happens. But he's going to hold all the cards here. And at the end of the day, the thing that I was thinking about today is that there's going to be a point where he's going to claim victory. I don't know how many, if it's 10 negotiations, 20 negotiations, if China negotiates with him or the EU negotiates with him, and he can say, I negotiated the tariffs with China, even though the EU never budged or something. He'll need to have something where he says, I can claim victory, whatever his target is. I don't know how far he wants to do a lot of these tariff negotiations with countries, but there's going to be a point, and I'm pretty sure of this, and I'm surprised no more people are noticing this. Is Trump likes to talk about the stock market. Biden wasn't a talker that much of the stock market. Biden actually had a pretty okay performing stock market, and he didn't really promote it that much. Whereas Trump, obviously, he obviously goes back to his first term quite often and says, oh, look how good the stock market was in my first term. And even last night, I think he was commenting on the stock market, and maybe that was one of the reasons why the stocks also opened up a little bit lower. He's like, yeah, there's going to have to be some pain in the stock market for this tariff situation. Like normally he's quite supportive of the stock market, and all of a sudden he turned his back on it, and he was like, no, you guys are going to have to go through pain as well. And maybe that's obviously something that sent the stocks lower. But he won't want this on his record. He's fine in this first year having a stock market that doesn't do well, doesn't perform. But, he'll be thinking 4 years' time. He won't want to have a stock market that underperforms, that is negative. He won't want a stock market that underperforms someone like a Biden. He won't want to have that on his reputation where he goes, I had a worse performing stock market than Biden's stock market performance. He will want to brag about it. And that's going to be his ultimate aim. So at some point, in my opinion, he will have to pivot on the tariff situation. It depends on how long and how aggressive he's going to go into this, and then the knock-on effect is like the longer he goes into it, then that's obviously going to disrupt the economy more and more. That's where you're going to have inflation going up more, the recession going up more, and then the stock market will go lower. But I think in his head, he will be thinking about that. Obviously there's still quite a long way to go, so he's got plenty of time at the moment. But I certainly do think, and I think this isn't being pointed out a lot at the moment by a lot of media outlets, is that he won't want to. How the stock market's doing at the moment is not how he will want to finish it. And obviously the thing is that he'll hope that some of these tariff negotiations as well will help boost the economy. You have a higher stock market, but we'll see what happens. We'll see how far he wants to go with this situation. But yeah, overall, like the big takeaways that I took away from this today is that obviously crazy day, big volatility. Don't time the market, because you've seen today, if you do try to time the market, you can very quickly miss it. How quickly some of these stocks can bounce as well. And yeah, just a little bit of thought I had the other day is like, I think a few people are thinking like this is going to be a terrible 4 years, but I certainly, if anyone wanted to put a bet right now, in 4 years at the end of this presidency with Trump, will the stock market be higher than where it is right now? 100%. I would be willing to take anyone's bet on that one. The big thing is, will he have a stock market that outperforms Biden? That would be actually quite an interesting one to see if it happens. But yeah, we'll see what happens. It was an interesting day to watch all the market volatility. And glad I bought in the morning, early hours of this morning, because obviously if that is the bottom of the market, that was actually the point where I was actually starting to get a little bit more aggressive. As you can see, that's when I did actually go in with quite a few aggressive buys. And even the members buy section on Discord, I think loads of people were putting in their buy list as well. As the market did, as of today, I actually thought was actually starting to finally get to, this is actually getting quite attractive levels. And it wasn't even just the stocks that I own as well. Like I was looking around and there's other opportunities. I was looking at the likes of Adobe was starting to get very interested. I mean, Nike, I've been so negative on Nike, but that one keeps going to a point of view where eventually there's got to be a level where I buy Nike. Trade Desk as well. I'd love to cover the Trade Desk on the Discord and the Patreon on at some point and see if it's a buy, because that's kind of near the levels there where I said I would buy now. So I think it's time to take that one a little bit more serious. So yeah, we'll keep an eye on it anyway. So yeah, thanks for watching, guys. Busy week coming up as well. Obviously we've got the tariff news, but obviously we've got like the likes of JD Sports earnings coming up as well. So I'm sure I'll cover that one in either the Patreon or the YouTube as well. So yeah, it's not going to get any easier this week. So we'll see what happens. Thanks for watching. See you in a bit.